So this is going to be a brief overview of gains and losses, and this will be my last video for this chapter. So if you sell an asset and you have a gain or loss, you have in what type of gain or loss it is. So here's the formula for calculating it. The amount realized minus the adjusted basis. So the amount realized is basically how much did you pay for it minus any expenses it cost. And your adjusted basis is really your cost minus your accumulated depreciation. Okay, and so we've got 5 slides, and we're gonna cover this information on these next 5 slides. This is probably the most misunderstood. So capital gain is nothing more than a capital asset. An asset is something you own. Here's examples of different type of assets. Okay, they can receive special tax treatment. It depends on how long you held them. Short term is always 12 months or less. Long term is more than 12 months. And the key is, how are they taxed? So short term are taxed at what we call ordinary income rates, whereas long term are taxed depending on what bracket I'm in. So you really have to pay attention to that. So let's take a look at some things. Net capital losses are allowed up to $3,000 per year against ordinary income. So if I have a larger loss than $3,000, I can only take $3,000 per year. And I can take the rest. I can carry forward. That means I can take $3,000 the next year and so on. On chapter 4, we're going to cover more of this. So let's take a quick look at this. I purchased stock for $8,750, and then I sold the stock for $12,800, and I paid a $200 sales commission. So what is my amount realized? My amount realized is how much I sold it for minus the $200. My adjusted basis is what I paid for it. My gain or loss is the difference between the two. And my recognized gain or loss is what I'm going to actually take now. And I'll show on the next slide. So this was what I sold it for minus the 200. This was my adjusted. Let's go back. Hold on. This was my amount realized. My adjusted basis is what I paid for it. Let's go back one. My realized gain or loss is $38.50 because it's this minus what I paid for. So this was my profit. And number 4 was my recognized gain or loss. In this case, my recognized is the same. It's very important to know whether it's recognized or realized. Because it was held for more than a year, the gain is a long-term capital gain. It'll be taxed at 0, 15, or 20% depending on where my income level is. Okay, and there may be something else. So that just kind of talks a little bit about capital gains. We'll have a whole chapter later on. There's an IRS website, obviously you know that. It may seem overwhelming, but honestly, you can find everything there. And they have great YouTube videos. But remember, things change from year to year, and so it might not be the same every single year. And the last slide talks about different methods of filing. Honestly, they really want you to do e-filing now because you're going to get everything is done quicker if you mail. And an example of the pandemic in 2020, when everything was mailed and then they shut their offices down, returns sat in warehouses untouched for most of the year. So you really want to try to e-file when you do that. So this concludes chapter 1. This is my lecture videos for this chapter, and hopefully it helped you to understand things. Thank you.